Juul is getting a temporary pardon after a federal appeals court granted the e-cigarette company freedom to keep the product on the market pending further review of the FDA's previous decision to ban it. Joining us now to discuss what this means for Juul is Cowen research analyst Vivien Azer. Vivien, good to see you as always. So what's the next step here for Juul?
So as you rightly said, they did pursue an appeals process with emergency injunctive relief, which the company was granted on Friday. That's critically important because the FDA reportedly has pursued enforcement action in a very quick fashion, with retailers being asked to destock the products as of Thursday's release of the marketing denial order. So they will pursue legal action as a remedy, and they will remain on the marketplace in the meantime.
Vivien, it's Julie here. Give us a little context as to how important this is for Altria, this Juul product, because it hasn't put all of its eggs, e-cigarette-wise or future cigarette-wise, in this basket, but still, it's been a really important bet for them.
Well, on the e-cigarette side, they in fact did put all their eggs in that basket. So in December of 2018, they invested $12.8 billion for a 35% stake in Juul. There was a non-compete that was part of that. And so Altria walked away from their own innovations, namely Mark 10, and they were completely reliant upon Juul. Now, the value of that stake has gone down to $1.6 billion as of the first quarter of 2022. So a very meaningful reduction, but it still doesn't release Altria from the non-compete. The value of that $12.8 billion Juul stake has to fall by 90% or more for Altria to take their own path on e-cigarettes. So unfortunate given the mounting challenges around reduced risk products that Altria is facing, given the pending acquisition of Philip Morris International of Swedish Match, which could put at jeopardy Altria's access to the heat not burn proposition, IQOS, which they had for a time been able to sell in the United States.
And so for the broader e-cig market kind of facing this flashpoint and this kind of major moment, inflection point, but to the downside, does that also have an effect on some of these other companies that had really baked a lot of their future kind of estimations and their growth strategy on what the e-cig category could be?
So e-cigarettes is still a $7 billion category in the U.S. So while it certainly had its challenges and took a dip when novel characterizing flavors were removed, Juul was proactive in doing that in the spring of 19. No more mango, no more cool cucumber. The category is back in growth mode. And it seems that the FDA's aspirations around cigarette regulation would indicate that they expect the e-cigarette category to remain viable and a landing spot for cigarette consumers that migrate away, because the FDA is pursuing two strategies in cigarettes that suggest that they do want to move consumers down the risk continuum. Currently, they're going through the proposed rulemaking process to ban menthol cigarettes. That started in April of this year. That's a 12-month process that'll be followed up by litigation. As well, on Wednesday night, the FDA and the Biden administration formalized their aspiration to move forward with proposed regulation to lower the level of nicotine in all cigarettes by 95%.
So Vivien, given all these mounting challenges, to your point, should investors just totally ignore this space?
We published an analysis this morning looking at how Altria's shares have responded to prior FDA announcements that proved disruptive to the stock price. So in 2017, Altria's multiple took about 5 months to recover, and in 2018, it took about 4 months to recover. But those announcements didn't have as significant implications in terms of the strategic outlook as we think the mounting challenges have for Altria right now.
It's interesting, Vivien. One wonders, the other strategy that Altria could take is not to appeal, right? Or Juul could not appeal. And then perhaps Juul would fall below that threshold that you were talking about, that valuation threshold, under which then Altria could pursue other technologies. Is that ultimately what could end up happening anyway?
That could very well happen. I don't think that that's kind of the desired first step. If you think about Juul's competitive positioning in the marketplace, I mentioned that they do have a 33% share. They have been ceding share to British American Tobacco. They have a 35% share in Nielsen track channels with Views. But the e-vapor category through convenience and gas stores is very tight from a competitive standpoint. So being able to move in as a disruptor is certainly going to be more costly to Altria than continuing continuing to lean into that Juul investment.
Vivien Azer, who is the Cowen Managing Director and Senior Research Analyst. Thanks so much for helping us break this down, Vivien. Appreciate it.
Are bidding wars a staple of the pandemic housing boom now coming for the rental market? The median asking price surpassing $2,000 for the first time ever. Peter Beckford is a realtor for RE/MAX Premier in the Atlanta area and joins us now. Nice to see you, Peter. What are you seeing in the rental market there? Have bidding wars come to Atlanta?
They have. They've followed the bidding wars for purchases, but indeed, a lot of the folks who are not able to purchase have now found themselves bidding for rental homes, and we've got quite an influx of applicants, and it's getting pretty hectic.
And as we've seen, I mean, monthly rent hit $2,000 a month there, a record in May. But despite that, we even saw that Gary Berman, chief executive of Tricon Residential, he says in any given week, they get 13,000 leads for only 200 homes available. Is this something we can expect to continue for the long haul as we continue to see these mortgage rates go up?
It's definitely possible as the market continues to hopefully balance. Folks are making decisions between whether or not they want to continue their pursuit of purchasing versus tapping out of that market and going into the rental market and the influx of folks entering that area. I can tell you, I've personally had rentals myself up to $3,500 per month that I've seen 50 to 75 applicants within the first 12 hours. So it looks like it's something that will be continuing in a foreseeable future.
Peter, how much are people paying over asking? If you had to average it out with what you're seeing right now in Atlanta, are we talking $500? Are we talking $1,000 a month? I mean, put this in perspective for us.
Me personally, in my experience, I've seen offers of like $100 or $200 over what the list is. But I would say probably more importantly is the large applicant pool, and the overqualification of that pool has led owners, landlords to be a lot more selective. So those who may be marginally qualified for a certain rental at a certain price point or area or whatever the circumstance may be pushed out in favor of someone who may be more qualified than them.
And uniquely qualified is in Atlanta, and that is the second highest city in the country in terms of long-term extended stay hotels, more than 30 days. People are actually turning to extended stays because they can't afford the rental market. Who is this impacting the most, and are there any solutions?
Right. I would say the average blue-collar everyday workers, the ones who are experiencing this situation the toughest. Again, as they're being priced out of the regular purchase market, of course, they have a need for housing, good housing, whether it be close to good schools, job transfers, first-time home buyers. It makes it very difficult for those folks. So that's who I feel and see it impacting the most currently.
And in terms of what people are doing to try and sweeten the deal, obviously people recommending that you go over asking in terms of rent to try and lock it in. But then you also mentioned, we're also seeing people even asking their previous landlords for recommendation as if they're applying for a job. What should people try and do to really increase their odds of locking in a rental space?
I would say number one, being incredibly responsive. The moment that you see something on the market, you want to approach it. If you can, speak with listing agent and/or the apartment complex manager on site directly. See what it is that they are looking for that's important to them and get it to them as soon as possible. Make sure that your credit profile is clear. Make sure you speak with your previous landlord and let them know to expect a call of reference going towards them, so they're not caught off guard or miss that call. And that's really as much as you can do.
The purchase price there in Atlanta up 23% year to date. Are you seeing softening of the prices there or any expansion of inventory, or is this just what we're stuck with?
Yes, funny you mentioned softening of the market. I do see some softening of the market, thankfully. As you know, of course, with the recent increase in mortgage interest rates, it has directly hit, home on Front Street. And we do see folks that are pulling away from the market. and sellers, as a result, decreasing their prices to hopefully get their home sold in a timely fashion and move forward. It brings some level of optimism for those who are in the market that instead of having to bid against 20 plus people, they may be bidding against 5 or less folks now. So it is softening to that extent. Hopefully and likely it will continue to do so as the months come close.
I know a lot of people could really use some of that optimism. Thank you for joining us today, RE/MAX Premier Realtor Peter Beckford. Thanks so much.
Nike is in focus today after its fourth quarter earnings warned of more pandemic-related disruptions to come in China, with the retailer's CFO saying they are taking a cautious approach to the region. Joining us now to discuss is Goldman Sachs equity analyst and managing director Kate McShane. Kate, always great to see you. Look, I think a lot of folks are surprised by this market reaction off this Nike quarter. They missed on many parts of their business, sales and margins, inventory up more than sales. What was your take on the quarter?
Yes, I think that's all correct. Honestly, there were some misses here, but going into the quarter, speaking to investors, the greatest concern was on China. And I think now that we have the news in terms of what happened in China during the quarter, sales were down 20%. China EBIT was down 55%. Now investors can kind of take stock of what's happened, and Nike's given a game plan on how they plan to resolve it. Why we're in this situation, of course, is because of COVID lockdowns. It impacted many brands in China during the quarter. And Nike wasn't any different. The company does plan to aggressively work through the higher amount of inventory in the market, and they are guiding that they should see more of a pull market, which is their words, by the end of their fiscal Q2.
As they work through that inventory, we've heard their long-term goal is to be at 65% full price realization, but as they're working through that inventory, it sounds like they're going to have to do more of the deep discounting.
In China specifically, yes, it's something they did during the quarter. It's something that they're going to continue to do the next couple of quarters. I think in other regions, you have a better inventory situation. There still is some tightness in the supply chain. So what we have seen the last year or two is because of very high demand and a very tight supply chain, you have seen more full price selling and sell through. There is guidance across the retail industry that as the supply chain gets more in balance and demand comes off a little bit, that you will see more promotions going forward across the board. Nike, though, has been cleaning up their marketplace, has been pulling back from undifferentiated retail, and that should result in more full price selling going forward overall.
I guess good for Nike, not so good for those of us who are in the market for sneakers at a lower price, Kate. We were sort of talking about the general consumer trends earlier, this sort of shift that we are seeing in what consumers are spending money on, right? Of course, we saw that in the case of Target. We're seeing it in the case of the shift to services and travel, in particular from goods. Is that something that we are seeing or could see affect Nike, and how are we seeing that play out on a larger basis?
Yes, it's a great question, and I do think we are seeing signs of that consumer wallet shift. Like you mentioned, Target was one of the first ones to flag it. We're seeing way more purchases in things like beauty and luggage, things that support kind of a reopened economy versus comfortable clothing, for instance. But I think what might be different for Nike with regards to demand going forward is there is a strong underlying health and wellness trend. I think that was only accentuated during the pandemic, and that's something that should probably sustain industry growth for the longer term. I don't think we have to worry as much about a pull forward in footwear and athletic apparel as maybe we do other categories.
Kate, just quickly a follow-up on that. What percentage of Nike's sneakers and apparel now are performance versus lifestyle? It seems like the scales have really tipped towards lifestyle in the past, say, decade.
It's a great question. I don't think we have those numbers from the company. How I like to think about it is, you find your more performance sneakers for athletic occasions, like playing basketball or playing soccer in places like the sporting goods stores, so like Dick's Sporting Goods. And the more lifestyle has always been in more of the mall, like Foot Locker. But, now that Nike is going more direct and partnering with these wholesale partners differently, you are seeing more of a shift in terms of what retailers are selling in terms of performance and lifestyle. And of course, Nike is selling everything themselves as well. So I don't know if the mix has necessarily changed significantly over the years. They've always had a good balance between performance and lifestyle. But that is some of the shift that we're seeing, where the wholesale channel is changing and Nike's selling more directly.
We do know that real hoopers will play in anything, Kate. And so that is my argument, at least for when I step on the court with some pandas or whatever is out there. So additionally here, I will admit I'm no FX expert. However, it's been interesting to see how many companies have been citing some of the FX headwinds. Not just Nike, we've heard this in the tech sector as well. How much of kind of a headwind do you expect this to be for the current quarter that we're in or wrapping up and ahead of the next earnings season?
Yes, so it is going to be a headwind. I mean, that's where we did get a little bit more guidance from Nike last night. They did mention that, currency neutral, they expect their sales to be up, 7 to 8%. And I believe there's a 400 basis point headwind as a result of currency for them. Nike, being a global brand for so many years, has always had to deal, with these currency headwinds when they arise. So one good thing, at least on the top line, is there is a good degree of visibility of how much currency can impact the top line, but you can read through, exactly what that means for sales and then parse out if the underlying sales are still strong. So currency is a headwind. It does weigh on the top line and the margins, but it is something that you can anticipate. And again, you can look at what the underlying trends are ex currency to assess the health of the business.
Okay, moving off Nike, I was looking at your coverage list, and you have a sell rating, I believe, on shares of Best Buy. Now, what does that reflect? Is that you being concerned about how a recession shapes their financials this holiday shopping season?
We've had the sell on Best Buy actually for a while, I think since December 2020. And the couple of things that we highlighted at the time and continue to highlight is that we do think consumer electronics has been more of a beneficiary of people staying home than not. So again, going back to the wallet shift that you guys mentioned earlier, part of what Target did see during their past quarter was a shift away from consumer electronics. I think it makes sense. We had a big work at home, education at home culture when the pandemic was going on. It doesn't mean to say that no one will buy another consumer electronic again, but the compare is so much harder, we think, for consumer electronics than certain other categories. I think we also worry about the gross margin outlook for Best Buy as well. This is not one of the companies that saw huge margin increases during the pandemic. They kind of stayed within their range. And now this year, as we get into a more promotional environment, and again, that's every category, in addition to the fact that they're rolling out their total tech support business, you are going to see weight on gross margin as well. So we just think there's a little bit more risk around those numbers in 22 than there are maybe for other companies we cover.
We'll be tracking it. Thanks, Kate. Good to have you on. Kate McShane, Goldman Sachs equity analyst and managing director, talking to us about retail. Appreciate it.
We are continuing to track the fallout from that landmark decision that came down last week with the Supreme Court overturning Roe versus Wade. California voters now expected to decide in the fall whether to enshrine the rights to abortion and contraceptives in the state constitution. This, of course, comes after that decision on Friday. And to talk more about this, let's bring in the Lieutenant Governor of California. We've got Eleni Kounalakis joining us from Washington, D.C. today. And Lieutenant Governor, it's good to talk to you today. I'm going to get to that ballot measure that is officially going to be voted on in November in just a bit. But in the statement you put out last week, following this decision from the Supreme Court, you said that you expected 3,000% increase in the number of women coming to California to seek care. And I wonder to what extent you've already started to see that inflow as a result of what played out on Friday.
Well, we had started to see it over the course of the last few months, but we're expecting it to increase pretty dramatically. You were talking earlier about companies across the United States which are telling their employees that if they need access to care, they will get that assistance from their companies. So when we're already seeing this kind of mobilization, well, where are those women going to go? They're going to come to states like California. So we are preparing the way to expand our capacity for women from other states to access care. And we're also doing other things. We're building a website so that women can go online to figure out if I need to go to California, how do I get there? What can I do? What kind of assistance? What kind of programs? What kind of philanthropic assistance exists? And then we're also doing things at Kiko, like if a woman comes here, what if her home state decides to subpoena her medical records to see what she was doing in California? So we're building the legal infrastructure that will also help protect women who come to California. So yeah, we're getting ready.
Let's talk about SCA 10. This is the legislation that you co-sponsored, which essentially would enshrine abortion rights in the state constitution. It's officially on the ballot for the November election now. Why take this route?
Well, it's a really big deal. Voters are going to go to the ballot in November and decide whether or not to change the California Constitution to enshrine the right to access abortion and contraception directly in the state constitution. So we're really very organized and ready to bring this to the people of the state of California. And we expect that it will be broadly supported. And it will help us by taking this really pretty extreme step by putting something so explicit in our state constitution that this is going to help us protect the right to access these things over time in our state. Abortion is legal in the state of California. As we know, what the Supreme Court did is it put it to the states. So it is legal in California. But what we have heard from Mitch McConnell is that if Republicans win more power in Washington, win the Congress, win the White House, they're going to go after us in our state. And so we are going to get ready to fight for our state's rights. But of course, we're also going to work hard to make sure that there are Democrats in the federal government to not just ensure that California women will be protected, but women across the country can get this right back to them as a protection under the Constitution, which of course we strongly believe that we have a right to that protection in our Constitution.
Lieutenant Governor, it's Brian Chung here. I wanted to ask, just kind of to elaborate on the first question about the infrastructure in California. It implies if there are people coming from other states that there will need to be more doctors. There will need to be perhaps more supply chain of different types of products. You're already seeing rationing right now of Plan B and contraceptives, emergency contraceptives right now. Wondering how you're thinking in the immediate aftermath of last Friday's decision about what California needs to do to make sure that infrastructure is there for people that are trying to come in.
Well, Ryan, it's actually not that complicated. We know what we need in order to be able to provide that care. What we have to do is have the resources to do it. So that's why the governor and the legislature are allocating funds in order to scale up the clinics and the providers that we already have in place. And we're going to continue to invest in that, again, not just for California women, but because in California, we believe that all American women should be protected by the Constitution in order to be able to make their decisions over their bodies. And if the other states are not going to do it, if we have, as we do, this radicalized Supreme Court that is trying to strip away this fundamental right to that women have enjoyed for 50 years, have had for 50 years, we will do everything possible to scale it up, to provide it and be a safe haven in California.
And on that front, we did hear Governor Newsom last week talk about setting aside $20 million in the state budget over the next 3 years to specifically help women travel to California and pay for necessary abortions. How's that going to be distributed? How are you thinking about allocating that $20 million?
So we are the largest state in terms of population. We're a state of 40 million people, and we were the 5th largest economy in the world. We have the infrastructure. These funds are going to go to scale it up. You know, I'm here at Select USA. There are companies and investors looking at foreign direct investment into the United States from around the world. And what I'm hearing is that California is now being recognized and differentiated from other parts of the country because we believe in basic human rights. A basic human right is women having control over our bodies. So this is what we're doing. We have the capacity to scale up and to fill this role. California is not the radical element here, but we really are going to continue to provide this access and this right that has existed for women in the United States for 50 years. We're going to keep doing it, and we know how.
And I want to rewind to what you had said earlier on about, some of the other issues that are linked to this as well, like, for example, data privacy and data sharing for someone that travels from a state that maybe has a trigger law now to California to get a procedure done, and that state asks for things and data about what they've done in California that maybe you won't share that data. Also, the same thing with the possibility of litigation for those that help women get legal abortions in the state. Do you worry that there will be federal challenges to what California might be doing on that front? And how do you actually codify those types of approaches from a state legislature standpoint?
Sadly, we are gearing up for any kind of related impact of this circumstance, which, let's face it, most people in the United States did not think Roe versus Wade would ever be overturned. Most people consider this to be settled law. We are in the 21st century. Women have had this right. And, Ryan, let's face it, men are also part of of who is impacted here. So women and our male allies need to work together to make sure that we are prepared for any eventuality. And yes, the legal infrastructure surrounding it is part of it as well. A state that is driven by a radical religious notion around pregnancies, that may decide to chase women to California to find their medical records and then prosecute them back home. These are scenarios that just a short time ago were really just inconceivable. And yet here we are, and we have the tools, and we're going to be ready, and we're going to do what we can to protect women. And we need, of course, not just in our state, but in other states, we need to work together. We need the support of our male allies, and we'll be ready.
And finally, Lieutenant Governor, California lost a lot of companies, at least their headquarters, during the pandemic to low-tax states. I've heard the governor come out and say, we welcome those companies back. Is the state actively recruiting some of these companies that have publicly come out and said, we will pay for our employees to be able to travel to get abortions, maybe those who were started in California, used to be based there? I mean, is there an active recruitment process already underway?
I'm so proud of the state of California. We are the place where the future happens first. And even though we have always had companies coming and going or building up and then moving, that's always been a reality that we face because we are continually churning out more successful companies. 20 of the fastest growing companies in the world, according to Forbes, are headquartered in the state of California. Unfortunately, we are a victim of our success in terms of our housing prices. The median home price last month in California surged to $900,000. In places like Texas and Florida, it's $300,000. So if everybody's leaving California, who's bidding up the prices of our housing? And the fact of the matter is that we have a very dynamic economy. It is constantly regenerating. because more innovators are coming up and reaching success. But in terms of companies coming back to California, absolutely, our door is always open. We welcome companies back again. And if this is one of the factors that reminds them why they love California in the first place, then so be it.
The battle for Spirit Airlines is coming to an end with a key shareholder vote later this week. Frontier is still seen as the front runner to land Spirit despite JetBlue's higher offer price. Joining us now is Spirit Airlines CEO Ted Christie. Ted, good to see you here on with us on what is going to be a really big day for your company tomorrow. Take us through this deal. Why have you guys said that the JBLU deal, why has it been poorly thought out?
Thanks for having us on this morning. We're really excited about this deal with Frontier. This is an opportunity that's unique in the aviation space where we're going to put together two really powerful ULCCs. Both of those companies today serve at the lowest fare. So it's a very pro-competitive story for consumers. We think, in fact, by combining the business, we're going to create a more powerful competitor to the big four airlines that'll actually drive as much as $1 billion annually in fare savings for our consumers. There's also a good synergy story here for our shareholders and a very positive story for team members, creating nearly 10,000 jobs over the next 5 years. So a really positive deal in a difficult market, but a way for us to create a more viable competitor in the U.S.
And Ted, we just had Robin Hayes over at JetBlue on with us. Take a listen what he had to say. We'd love to get your reaction on the other side.
A Spirit JetBlue tie-up gives us a real opportunity to create a strong national competitor to the large four airlines in the US that we know dominate the landscape and offer low fares and great service. And I think that is what we are uniquely positioned to do. We truly believe customers should not have to choose between a low fare and a great service. They should have both.
Now, Ted, have you been surprised by some of Robin's commentary? You talked to a lot of folks in the industry, and I think they have been surprised by how forcefully he has come out in recent weeks.
Yeah, I mean, obviously we were surprised in the beginning when we heard from them nearly 3 months ago with their unsolicited proposal. And I think, once their position turned hostile with us, the rhetoric has really kind of dominated, which in my view is at this point appearing a little childish. We're big, sophisticated businesses. We're interested in delivering real value to our shareholders. We think our deal with Frontier can do that and benefit the consumer. And we have real concerns about a combination with JetBlue and what that might mean for the consuming public. And for that reason, be a very difficult regulatory narrative. We made that clear to the guys at JetBlue from the beginning, and we spent nearly 3 months trying to get them to a point where they could convince us that they had a story that could get across the goal line with the DOJ and with regulators, and they simply wouldn't do it. They kept throwing up walls and roadblocks, and so we had a very attractive bird in the hand here with Frontier, and we think it's the right deal for our shareholders, and looking forward to the vote tomorrow.
The vote is tomorrow, as you say, and so this is going to hinge on that. And I'm sure you've been having a lot of conversations with shareholders, as well as conversations with people like us to try to get the word out to shareholders. What's your level of confidence here that you're going to get the okay?
Well, since last week, Frontier did make an amendment to their proposal, and we've made that now public. At that time, ISS is now recommending for our transaction with Frontier along with Glass Lewis. So we have all the proxy advisory services telling our shareholders they should vote for. We have a very pro story heading into the vote. We think we've got some good momentum now from both the retail side and institutional side heading into the vote. So feeling positive now, really proud of the story that we have, proud of this group. In what has been a challenging environment to continue to operate well. We've been, over the course of the last month, been one of the best airlines in the business as it relates to operations. So a really positive story to tell there, and it's going to be a big day for us tomorrow.
Ted, what role do you see yourself kind of maintaining post-acquisition if it gets voted on?
Well, if you're talking about Spirit, we're going to be part of a big organization. There's going to be opportunity for everybody to participate in that. And, it's going to be an all hands on deck type consolidation with this business. again, as I said earlier, we are the lowest cost, lowest fare operators combined in the U.S. So we're going to need everybody to navigate the transition, and excited about the opportunities that it'll deliver to Spirit shareholders and to Frontier shareholders. And I'm going to do my best to make sure that's a total success, regardless of what's required of all of us. And I know our team is aligned on that here.
Ted, as a veteran of the airline industry, I'm just curious on what this process has been like for you.
Well, it's been an education. Like you said, I've been in the airline business for 20 years, and I've seen a lot of the ups and downs. And one of the best parts of being part of this industry is you're never bored, and there's always something exciting around the corner. I've certainly seen that over the last 3 or 4 months, so I can tick that all away and put that in my book someday. But I'm extremely proud of this organization. Spirit has built a fantastic company, a really good company over the last 10 to 20 years, and one that we can all be extremely proud of. And the organization has rallied during this time, and the pandemic was tough for all of us, but I'm really proud to say we've landed with our feet, firmly planted and intact and ready to continue to grow.
We'll be looking out for that book for sure, Ted. Just while we have you here as well, I mean, this has been a tough time for employees, for investors in airlines, but also for customers who are in this point in time looking at higher fares. Of course, Spirit comes in at the lower cost side of that, but also it comes with a customer that has detracted more from Spirit than has added to the Net Promoter Score. And so what changes would you like to see made in Spirit post-acquisition that would help with the perception and how Spirit is looked at in the broader landscape?
Well, it has been an evolution here at Spirit over the last 5 years or so. We've put tremendous effort into improving the company's reputation, its brand perception, and all of that's tied to its operational performance. And as I said earlier, we've been running really well lately. So continuing that into the summer is going to be a big step for us as well. I know it's been tough on the consumer and the traveler. This has been a difficult period as businesses, broadly speaking, get restaffed and deal with supply chain issues and inflation and all that. But we have been a steady climber here. The brand perception, our Net Promoter Scores, all those things have been trending in the right direction. And when we combine with Frontier, that's going to give our guests more opportunities to travel, more new places to go, a tremendous opportunity, broadly speaking, to be a loyal customer of that combined business. And more importantly, we're going to continue to drive low fares into what is a heavily consolidated industry at the top end. The top 4 airlines control nearly 80% of the capacity in the United States, and we're 4% today. So we're hoping that combination can actually lend to the competitive story that the government's looking for.
Spirit Airlines CEO Ted Christie. Ted, we appreciate the time here today. We'll be staying tuned for that vote for sure.
Mortgage rates starting to drop after 3 weeks of increases, according to Freddie Mac. So could that spell new hope for home buyers? Well, Erin Sykes, Nest Seekers International Chief Economist, joins us to break some of this down. So, Erin, what should we read into this data? Should people get excited just yet?
No, don't get excited. This is a micro movement within an overall upswing. And I think a lot of times we equate the Fed funds rate to mortgage rates, but there's actually a lot of other economic influences as well as individual influences into those rates. So you have everything from inflation, jobless claims, also your credit score, how big of a loan you're taking, et cetera. Also, of course, supply and demand. So the demand for new mortgages and also refinances has been slowing because we've had so much economic uncertainty. And because of that slowing, lenders gave a little bit of a bone and dropped the average rate about 0.2% over the last week. Now, that was a short-lived moment. We're now back up to about 6% for the 30-year fixed across the board. So it was really similar to a bear market rally.
And you mentioned supply there. Any improvement that we're seeing just in terms of the number of homes available right now?
Yes, we're up about 19% year over year for the supply in June, which is great because we were in such an extreme seller's market. Now we're really coming back to center, and it's almost amazing to think that you can have a balanced market. So that's where we're approaching, and I'm hoping it stays that way and does not go to the other extreme.
Yeah, of course, we're still about half of pre-COVID levels in terms of that inventory. Do you think there's talk of crash? There's talk of a correction. What do you see happening in the next 3 to 6 months?
So I think a lot of balls are up in the air. I think one thing that we should not necessarily rely on is the forward guidance by the Fed, because I think we have been overly reliant on such, and it's been pretty much misleading. They said they were going to raise 25 basis points, they raised 50. They said they're going to raise 50, they raised 75, and you're seeing a lot of people bank 100% on this forward guidance. So I think instead we should look to history. There are no gurus, there are just market cycles. So I think that we're in for a little bit more pain, and I do expect that to last throughout the end of the year at least, but we'll see where it goes from there.
And I want to ask you about affordability, because we saw the median listing price in June hit another record high, $450,000, and the cost of owning a median priced home in the second quarter would require 31.5% of the average US wage. That's the highest since 2007. Are we expecting any hope in terms of the affordability of some of these houses changing?
Not until prices start to decrease. And we see a lag of 2 to 3 months from that Fed funds rate hitting to where it really filters out in terms of home prices. So we just start to see the results of that first major hike, and we still have yet to see the 75 basis point hike really impact prices. So hopefully things will come down a bit. We're in for likely another hike the way things are going right now with inflation. So we'll see impact of lower prices throughout August, September, into October, and hopefully we can also see a leveling out of rental prices, because when prices to buy are this high, we have people stuck in the cycle of perpetual renting, and landlords can really take advantage of that, and they will continue to increase the average rents based on that incredible demand, because people cannot afford that first 20%, they can't afford the higher interest rates, so it is a catch-22.
Yeah, Aaron, the rental market is really incredible. When you take a look at some of the price increases that we're seeing across the country, what's your reaction to the price jumps that we've seen on a year-over-year basis? Is this anything like we've seen before?
Well, if you look to some place like Miami that has a 50% increase over last year, and they actually just put into law that you cannot raise prices so dramatically because it's really becoming pinched in South Florida in general. So we have never seen anything like that before. We have seen really elevated rents for a long period of time in the major cities like Manhattan, but you have isolated pockets where it really is extreme. So I think that Miami is settling down, it's leveling out a bit. However, it is extremely impacted by South America and almost runs on its own economic cycle as a result. And with all of the unrest in South America, you see an incredible demand continue for particularly new development in Miami. So I expect that market to stay hot even if others cool.
Yeah, Miami has been painful over the last 12 months. All right, circling back to mortgage rates where we started, how high do you think they'll climb? And because there's so many conflicting data points in the housing market right now, is this one of those times for people to sit it out or to jump right in before mortgage rates potentially climb again?
So a couple of things. I see most buyers sitting on their hands right now, and that's because we don't know where things are going. We're at about 6% as the average 30-year fixed. I think we're going to see 6.5% by the end of the year. Now, if you are a cash buyer, of course, you're going to have the most opportunity, and I expect that you would wait it out a bit more, wait for those price deductions to come along in August and afterwards once those rate hikes settle into the impact on prices. Now, if you do need a mortgage, get a rate locked in now. Basically, you can lock a rate for 30 to 60 days, and that gives you a little bit of time. Maybe you can catch the falling knife with a bit of falling prices as well as a lower rate lock and be able to get into the home of your dreams.
Ending there on a positive note. Aaron Sykes, Nest Seekers International. Thanks so much for joining us.
We are focused on Constellation Brands shares after the company reported quarterly beer sales jumped 21% on the back of strength in brands Corona, Modelo, and Pacifico. The company also revealed a plan to eliminate its Class B shares as it's potentially eyeing more deals. Joining us now to discuss is Constellation Brands CEO Bill Newlands. Bill, always nice to see you. Talk to us a little bit about what you saw in the business in June, because there's a lot of focus right now on consumers having to pay more with gas and perhaps pulling a little bit back on beer and other items like that.
we think June's going to be very solid and consistent with our annual algorithm. So one of the things that's important to recognize about beer is it's a staple for many, many people. And therefore, when choices get made, often beer still ends up in the basket. So, which works out very well for our advantage, as you can imagine.
Yeah, I imagine when you're paying that much for gas, you need something to cool your mind. Why not a few beers? Talk to me a little bit about pricing. You and I talked, I believe it was Cinco de Mayo, and you told me you're staying disciplined on raising prices in this inflationary environment. Any pullback in that thinking, given, well, we haven't seen inflation come down much?
We watch this on a weekly basis, as you would expect. But our belief is our long-term algorithm of raising prices 1% to 2% has done very well for us over time. We frankly recall in 2008, we got a little carried away with the pricing, and it took us a long time to recover from that. So we're very judicious on how we look at pricing. We certainly try to do everything we can in that area, but we look at it on a SKU by SKU, market by market basis. And are trying to understand that our consumer at the moment has some challenges, and we don't want to lose those consumers.
Bill, clearly you had muted yourself because you were saying ooh, ah during the fireworks segment. People see beer as a staple, as you said a few moments ago. But I am curious, and I know that you were asked a little bit about this on your conference call, if people are trading down, if they're getting a cheaper brand in their basket instead of a more premium one. And it wasn't clear to me if you are seeing any of that. Can you talk to us about that?
We're not seeing that with our brands, although you are seeing a little bit of that where some of the lower price brands are going even further down into sub-premium brands. So some of those sub-premium brands are doing a bit better than they had been, but it really hasn't affected our business up to this point. You still see, if you look year on year, there's continues to be a greater proportion of business at the high end of the beer business. It's up to 59.5% of the total beer business and continues to grow month on month. So, and that works again to our advantage because that's where we play.
Bill, as a rewards member of one of my local shops, I'm very much cognizant of when certain items go on allocation and they're unavailable for an extended period of time. How have you been able to navigate that in this environment right now?
As you know, we had a little trouble last year because we had a couple of big weather events early in our fiscal year. But our brands are all back in stock. We've worked very hard to make sure we have access to both aluminum and glass for cans and bottles, which are the critical elements that we have. Our biggest challenge, frankly, at the end of last year was brown glass. And as you saw with Pacifico, we were up 21% in the first quarter because we got ourselves back in order on the brown glass side. So fortunately, we're not seeing any issues with supplying demand, although clearly, as you saw from our results, demand is up.
Bill, so you are retiring or getting rid of the Class B shares, and I understand that might help bring in new investors who are very focused on corporate governance, but does it also send a signal to investors that Constellation Brands might be back out there on the hunt for a deal?
No, that's not the reason for it at all. It really is the former. Our view was, and the Sands view is, this was a perfect time to go to a single class of stock. We had a special committee formed of our board, which analyzed what the precedent transactions were, and had outside advisors both on a financial and legal basis. Our belief is this brings a lot of opportunity to the table. A single class of stock is more attractive to many people. It reduces voting control of the Sands. While they'll still be the biggest shareholder at roughly 16%, they no longer would have voting control. And I think a lot of investors will really appreciate this. As you note, it adds a lot of value in the governance area. And frankly, it also gives us some big savings because they're both planning to retire from their executive capacities, and that'll save us $15 to $20 million a year. At our PE ratio, that'll save us basically on value about $300 million. So we think all in, this is a very good option for shareholders.
On a sort of related note, because of the announcement of Canopy Growth's debt equity swap that it announced yesterday, your stake in the company is going up, closer to majority control. Now, Canopy, if you look at the shares, has been going in pretty much in a straight line down. Why are you guys still so confident in this business?
Well, I think it would be fair to say that we're very frustrated by the time it's taking to get to legalization in the United States. We still believe it's going to be a big business. but the time that it's taking is way beyond what our original expectations were. But if you think about a business that's probably 50 billion in the US today, most of it through the black market, and probably will double upon legalization, can it be set up to win? They've got deals in place with Acreage and TerraSen and Wana and Jetty and other things that would put them in a wonderful position to be a winner in the United States if we can get it over the hump on the legalization front.
Bill, what are you drinking going into the holiday weekend?
I must say, I have a couple of things I particularly like. On our beer side, Negra Modelo has been one of my favorites for a long, long time. So I'll be fully ready with some cold ones of that. And I'm really a big fan of the Prisoner on our wine side, whether it's their Chardonnay or whether it's the red blend, which is a big favorite in our household. And then if I'm going to have a little whiskey, I'd have a little High West. So I got to be flexible and be ready across all those sectors.